What is up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, Ethereum, and others. Before we dive into the analysis, just a quick reminder that everything on this channel is for educational purposes only and is not intended as financial advice. All right, so diving into Bitcoin here in the monthly time frame, we have had a pretty volatile day today, but we'll talk about why that is and how we've been talking about that being very likely the case either this week or next over the past few videos. So we've had this rise in price all through the end of 2020 going into 2021, and then we set a high here of about $65,100 on Bitcoin. We came down, had a significant drawdown due to liquidations, which is people that have levered up or went and took out borrowed money from the exchange up in this range to go long on Bitcoin. And then you can see that as we went down, those people were forced out of their positions or stopped out. And so what happens now is we get this nice longer lower wick situation here. We get a nice bounce. We said it was likely on this drawdown we're going to set a higher low in comparison to our low here at 9,800. It's just a matter of where that's going to be. And then now I said because of the magnitude of this drawdown, it's likely we're going to set a lower high at some point below the $65,100 level. And the reason is because if we were to try and go up from here and go above that high, on the first go, we'd have to rise over 126%, which is possible but unlikely. So we need to keep that in mind as we're looking at this monthly time frame. Now, with the monthly time frame, you can see that right now if we were to close the monthly candle like this, I would say that this is most likely going to be our high, and then the next couple months we'll look to draw down. Now, because of the magnitude of this move up, it's also likely that if we come down from this high, we're going to set a higher low somewhere above this low right here, and then we'll look to either come up and form a higher high, or we'll look to come up, form a lower high, and then come down and make a lower low. So it's really a matter of how high up we go on this rise in price in the monthly time frame before we set our monthly lower high, and then how low do we go on the drawdown to set our higher low if we're going to. So that's what I'm going to be watching for on the monthly time frame. That gives us a little bit of clarity on why we might be seeing the drawdown that we're seeing, but also talk about a couple other factors as well. So we have finally set a weekly high on Bitcoin after 7 weeks of up on Bitcoin's price action. So I've been talking about this for several weeks now, that it's likely we're reaching a high sometime soon. It's just a matter of where that high is going to be set, because you can't just go up forever without coming down and forming a higher low at some point in time. So you can see that the reason this candle looks the way that it does is because of liquidations again. So liquidations are people that are getting forced out of their positions. They're being forced to close, in this case, their long positions that they took out probably up here in this range as the price goes down. So as the price goes down, people are forced to close those out because they borrowed too much money from the exchange and now they don't have enough collateral to cover their losses. So the exchange is forced to close out their positions, and now you see the price when they close out those positions, it causes the price to drop, because if you're going long and you close out the position, that means you're selling your Bitcoin. So then it's creating sell pressure on Bitcoin's price, and you see this significant liquidity event here where we go from 53,000 down to 42,700 in the course of basically one day. Really more over the course of a few hours. So on the weekly time frame, this is really something that we knew was coming. I've been talking about that for several weeks now. It's just a matter of where that was going to be. And we got even higher than I thought we were going to. I thought this was going to be the high, around 50,594. But then last week we went up higher, and then this week we went a bit higher, and then we went down and dumped. So because of the magnitude of this rise in price, I think it's very likely we're going to form a higher low on the weekly time frame. either where we just went to, down at 42,700, or maybe, even lower than that. But I don't think we're going to go down from 53,000 down to, a new lower low in one go of over 45%. I don't think that's likely. So what we want to see if we're a bull is we want to see the price action come down, form a higher low, and then come up and make a higher high above this key high right here. So that's what I'm going to be watching for in the coming weeks, is to see if the bulls can change that trend and go into being bullish. So if we look in the 3-day time frame, we can see that the price wicked just above that gray support zone right here and then dumped soon thereafter. Now, what we saw here is right before this, we created a new 3-day support zone. So we can see right here we have this consolidation in price, and we have the makings of a bull trend. So we have a low, high, higher low, and then higher high pattern with 2 candle closes above this key high, making this candlestick right here our support zone for price. And we're currently operating inside of that support zone. So what I'm going to be watching for over the next several days is to see, do we bounce off of this level, or do we close 2 3-day candlesticks below this level? Because if we do, this will turn into a resistance zone for price that will then cause us to reject off of it likely on the first test. I think it's more than likely that we will bounce off of this level, but at this point, with the way this candle looks, we need to keep in mind that there is the possibility that we just push through this zone and turn it into a resistance zone for price. So if we go down to the single day time frame, we can see that today is the day that really the shit hit the fan when it comes to people getting liquidated on their long positions here. So this vertical drawdown is not just people selling. This is, like I said, a liquidity event, which means that once the price starts to go down a certain point, because so many people went long on this way up, they're forced to close out their positions, like down here below, 47,000 really. And that causes the price to draw all the way down to about 42,700. And then now we've bounced up. So you can see when there's liquidity events like this, this is an educational moment here. So when there's liquidity events like this, what you want to look for is the potential for a bounce opportunity. And you can see that we've already bounced over 10% from our ultimate bottom. Now, it's not always wise to be, trying to catch knives, but that's important to note that there is a lot of opportunity there in the shorter time frames when you see these sorts of liquidity events where the price moves either up or down very significantly. So this is an opportunity, obviously, to go long. One thing that I have been watching for that we're now operating within is the super guppy indicator here. So this, I honestly think we're going to bounce from where we're at. I think it's very likely that we're going to bounce. So we just went into this kind of green zone for the first time since we changed the trend. Now this indicator, you can see the price is already kind of bouncing here as we speak. It just bounced over $100 just now. This kind of zone is a very strong support zone for price, and the reason for that is because these are the longer term EMAs. They take a long time to roll over, but once they do, they provide pretty good support for price. So you can see that when they flip to be bearish here, here's an example of this. The first test of these, when they're all expanded, provided strong resistance, and we saw this drawdown of over 20%. On the bull side, when we're in a bull trend, here's a couple examples of us going into the green, bouncing off, going into the green, bouncing off, green, bouncing off, green, bouncing off. And, we keep doing that every time until eventually right here, we looked like we were going to bounce, but then we just continued down. And then you would close out your trade once you close below those EMAs. So right now, I think that, based on this wick, you can already see people buying the dip inside of these EMAs. And now we are looking to potentially see a bounce thereafter. So at this point, because of the magnitude of this drawdown, it's likely we're going to set a lower high somewhere probably around like, I don't know, 50K. And then we're going to have to come down again. But because we've already bounced significantly, depending on where we set that lower high, it's also likely we're going to form a higher low. So now what we're going to likely see is what we consider to be an equilibrium pattern, which is where the price is contracting. So that's where you're going to see something like this. So we come down, we come up, we form a lower high, we come down again, we form a higher low, we come up again, maybe we form another lower high, and then we come down again, and maybe we form another higher low, and you just keep doing that until eventually this thing is contracting, until eventually it either breaks out to the upside or it breaks out to the downside. But this daily equilibrium pattern now that we're likely going to see is going to be what I'm going to be watching for to give us direction in the coming weeks on where price is going to be moving. So you can always kind of forecast when you're going to see this sort of pattern play out and develop with the magnitude of a move. So when you see a daily candle like this, that's likely going to be an equilibrium pattern over the next several days, because it's unlikely that we're just going to see something like, okay, we set this low and then we just from there just go up for a higher high. Like we could, depending on where this candle closes, like if this candle closed like way up here, then okay, yeah, that's likely. But if we close like near where we are now, we would need to go up about over 12% for us to break to a higher high. And I don't think that that's necessarily very likely. So that's what I'm going to be watching for, is this equilibrium pattern to play out on the daily time frame and to see if we're going to break that to the upside or if we're going to break that to the downside. And I think we're going to break it to the upside just because, like I said, on the weekly time frame, we're forecasting a higher low to be set on the weekly time frame, and to set a higher low you need to bounce. So I think the daily equilibrium pattern will break to the upside, and therefore I'm buying Bitcoin right now inside of these daily super guppy EMAs right here. So that is what I'm watching for. And also one other thing I wanted to note, typically when you see blood in the streets, when you see something like this where you get a liquidity event to the sell side, there's usually some good buying opportunity inside of that. Clearly, if you would have bought down by these lows, in the $43,000 range, that was clearly a good buy already. But if you miss that, then you can see that, we could still also get a pretty good bounce if we close with a wick like this. This is a pretty long lower wick, even provided we have this long body. So it's likely we'll see a bounce thereafter. So if we go down to the lower time frames, let's go to the 4-hour time frame. The 12-hour time frame first. So from a 12-hour perspective, something I'm watching for is how the next two 12-hour candle closes, because if this candle closes, the one that we're on now, below this purple zone, and the next 12-hour candle closes below that purple zone, this is going to be an area of resistance for price once we go back into it. So that's going to be where, there's a potential short opportunity because this should have been support, but because of the fact, this upper wick here, this is invalid. Disregard that. Let's go down to the 4-hour time frame. Okay, so you can see now that this crazy 4-hour candle, this is what I was saying, where it happens all in the course of a few hours. This is one 4-hour candle that started at 51,129 and went down to 42.7. So this is a liquidity event. This is not regular selling. So when you see that, then what you're looking for is how is the price going to develop thereafter. And usually what you see is people kind of relax a little bit after events like this, because a lot of people probably just lost money. So those people are not going to be making any trades. And then the people that just saw this event are probably thinking, okay, the market's really irrational right now. I'm just going to take a minute to kind of rest and see how things play out. So we'll have to see how the 4-hour trend develops. But clearly because of this drawdown, we're going to see some sort of equilibrium pattern that will either break to the upside or to the downside. And so we'll be watching to see where that plays out to. Briefly, if we look at things like the Ichimoku cloud, we can see where we have finally invalidated the bull trend that we were in for this indicator with a candle close below the cloud. So that is pretty much in a neutral position, and the super guppies are now, we've closed well below them, and they likely will flip over to be bearish depending on where depending on how quickly we rise in price in the coming days. So that's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrencies and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we released on Lutheria.com. This is where you can find all of the information that you need to get started trading these crypto assets with precision and accuracy using things like candlestick analysis, trend analysis, volume analysis, and a variety of other things as well. So check that out. You can get 20% off using the link in the description below. And until tomorrow, onward and upward.